Online holiday sales are expected to grow at very weak levels. Could this be bad news for Amazon? Let's find out in today's episode. On October 10th of 2022, Adobe forecast that roughly $210 billion will be spent during the holiday season online. Adobe considers the holiday season the period from November 1st through December 31st of 2022. For those that are not familiar with Adobe, they are definitely a big place in the e-commerce analytics. Analysis cover over 1 trillion visits to US retail sites, 100 million SKUs, and 18 product categories. Adobe Analytics is part of Adobe's Experience Cloud, which is over 85% of top 100 internet retailers in the United States. So obviously they have great insight with all the data that they have on what to expect in the upcoming months. Axios actually created a chart based on the numbers that Adobe shares, and we can see how the overall online spending has increased dramatically year over year, but consider 2021 to 2022, the growth is very small. And we're going to find out some of the reasons for the slowdown in growth.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, this holiday season will represent a growth of 2.5%. versus 2021, which was actually 8.6%. There are a lot of things impacting this, right? First, we have to say is consumers are expected to spend earlier this year as Amazon is hosting their second Prime Day on October 11th to October 12th. So some people are going to be spending a little bit earlier than the holiday season. The other thing is obviously consumers are being impacted by uncertain economic environments like elevated prices offline for food, gas, housing, and the rising cost of borrowing. So there are fears of consumers spending a lot less this quarter. Just a quick look, they expect Cyber Monday to grow roughly 5.1% year over year. Black Friday online sales are expected to grow by just 1%, and Thanksgiving sales are actually expected to decline 1% year over year. Adobe goes even a little bit further, explaining what kind of categories are expected to see growth and which ones are expected to maybe see a hit in margins. Adobe expects electronics to drive $49.8 billion of online spending, up 2.9% year over year, but unfortunately heavy discounts will impact margins and spending, but attract enough shoppers to maintain growth. So obviously this means a lot of kind of these electronic companies or any kind of these commerce companies that sell electronic goods are going to see a margin decrease with all these kind of specials and discounts they will be given. In apparel, it is actually expected to decline 6.7% year over year as more consumers go back to kind of physical stores to kind of try out their physical apparel. Finally, the one that's actually expected to grow a nice amount is the online groceries, as groceries to drive $13.3 billion of spending online, up 10.5% year over year. Adobe even goes a little bit further and tells us which markets and categories are expected to see the biggest discounts and by how much. For example, computer, electronics, and toys will hit all-time highs in discounts. Discounts for computers are expected to be as high as 32%, up from 10% in 2021, while electronic discounts are set to be as high as 27%, up from 8% last year. So we can see some of these companies are definitely going to take huge margin hits. Do you think this will take a bigger hit on Amazon, or are there other kind of retail stores that might take a bigger hit? Also, if you are enjoying the episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. So like I mentioned earlier on, Amazon is actually hosting their second Prime Day sale, and it's going to be on October 11th to October 12th. This is the first time this e-commerce giant has hosted 2 events in 1 year, and we've seen a lot of companies talk about over inventory and inventory correction, so it does seem like Amazon is trying to get ahead of the curve and try to kind of reduce a lot of that inventory as soon as possible. If we take a closer look at Amazon's past earnings, we can see online stores actually declined in their second quarter of 2022. But certain markets continue to grow. For example, the subscription service, their advertisement service, their AWS service. And if we take a closer look at operating income, huge operating income comes from AWS. They actually have a loss in North America in this most recent quarter due to numerous reasons. One of the biggest reasons is the amount of investments they are doing into their kind of fulfillment network, but also the increased transportation cost, increased wage rates, and incentives. So obviously the macroeconomics environment right now is impacting the e-commerce side of Amazon. But I do want to say what's bullish for Amazon is they have a huge diversity market amongst them. So I don't think it would be a huge impact for Amazon stock, especially if they have AWS. That, in my opinion, is going to continue to grow. I do believe some of the biggest losers for something like this would be a company like Best Buy, where most of their money comes from overall sales in the consumer market, right? And now if they have to kind of reduce or have heavy discounts, then their margins are going to drop dramatically. So obviously it could affect Amazon, but to me, some of the bigger losers are going to be companies like Best Buy. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.